Today, Bitcoin holds on to yesterday's gains after better than expected inflation data. The House votes in favor of rolling back IRS rules on DeFi brokers. And Feng of Sei Labs reacts to the recent volatility in crypto markets. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Digital currencies are mixed this morning, with Bitcoin inching higher as of noon Eastern. The largest cryptocurrency traded at $81,700 as tech stocks on Wall Street rebounded. That's thanks to a softer than expected inflation reading that eased some concerns about the state of the economy. Ether, meanwhile, heading lower. It traded at $18.69 by noon Eastern. XRP moving higher, though, gaining 3.3% since yesterday. Okay, let's talk about the top stories. The House just joined the Senate in passing a rollback of IRS rules for decentralized finance. The measure passed the lower chamber of Congress with 292 members, including 76 Democrats, voting in favor. The IRS finalized rules at the end of last year, directing DeFi brokers to collect customer information and produce 1099 tax forms. When the Treasury Department announced the rules back in December, it said the collection of information from brokers would prevent errors and non-compliance from taxpayers. The House Ways and Means Committee said the DeFi broker rule would create undue burden on the American taxpayer. The Senate now has to pass the bill again before it heads to President Trump. Next, the SEC has delayed a decision on whether to allow ETFs for certain altcoins. In a number of releases published on Tuesday, the securities regulator gave notice that it was taking extra time to consider rule changes to allow Solana and XRP fund proposals from Bitwise and 21 Shares. The agency is given deadlines to respond to fund proposals, but can extend that deadline up to 240 days. Multiple asset managers rushed to propose new ETFs, in part thanks to Donald Trump's 2024 electoral victory, and hopes that the SEC would take a friendlier turn toward crypto. And to that end, the regulator has done a sharp about-face on crypto policy, including curtailing multiple investigations into some firms and filing motions to end legal actions against others. All right, for our main story, let's talk a little bit more about markets and industry sentiment. Crypto World's Jordan Smith spoke with Feng, co-founder of Sei Labs. They discussed the recent volatility in crypto prices and how blockchain developers feel as U.S. policy toward crypto evolves.
All right, Jeff, thanks so much for being here today. I want your reaction first to the uncertainty in the crypto market right now. I guess I want to know whether you feel like this pullback is entirely about trade and economic uncertainty, or if part of it is, still waiting for good news from Trump and the U.S. We saw the excitement after Trump's election, but it seems like things have died down. Where do we stand right now? What's driving the market?
Yeah, absolutely, and thank you for having me on, Jordan. One of the big topics, obviously discussed, especially amongst a lot of the folks that work in the crypto industry, is what are the big drivers of at least this more recent market pullback, some of the motions that we're seeing in the market today. I'd say a big chunk of it comes from the exuberance that happened after the Trump election. With all of the expectations that were riding on him, all of the comments that he made over the course of his campaign, naturally markets will get ahead of their skis. This happens every single time. When good things happen, they always get ahead of their skis. When bad things happen, given the heavy level of speculation and emotion that's still very much present in the crypto markets, you'll see that over-index in either side. So we're seeing that pendulum start to swing the other way, where the expectations that were built up over the course of sort of end of last year, Q4, and the beginning of this year, are starting to just retrace. So it's more of a setting of expectations to a more reasonable standpoint that this is just the beginning of his presidency, and there's still a long sort of 4 years ahead of him. The second big one certainly comes from tariffs and uncertainty. That has a little less of a direct impact on crypto. More comes down to how crypto sits as an alternative to other investments and whether or not equities, and so much more of a correlation, I'd say, there.
Yeah, to that very point, I spoke with Bill Barhydt of Abra yesterday, and he said the moves of Bitcoin were reminiscent of 2017, where you saw this real, retrenchment in price before it ultimately ran higher. If that does ring true, if this is another 2017, do you expect prices to turn much lower, or where do you see support for Bitcoin's price right now?
Yeah, absolutely. So to answer the first part of the question, yes, I think this is a sort of healthy readjustment of expectations. But when you're actually peeking behind the market, just a lot of the sentiment, sort of noise, getting to what are the real points of progress that are being made around Bitcoin's establishment as a truly institutional asset, as a trustworthy source of store of value, as well as some of the things that are happening on the ground floor in crypto. All of these sort of fundamentals are aligning in the right way. But as we've seen cycle after cycle in crypto, the frothiness, the excitement certainly ends up getting to an unhealthy standpoint at many, many points in the industry's past. So that kind of retracement is a very healthy sentiment to weed out some of the folks that aren't here for more longer term reasons, and really highlighting and making sure that the people who continue to build through this sort of period really get rewarded down the line. When it comes to what sort of level Bitcoin can fall at, every time a very aggressive correction happens, Bitcoin's sort of stable price floor obviously ends up increasing time after time. The big difference in this case is the ETF. That would say the drastic difference between 2017 and what we are anticipating this to be some sort of version of 2017, in a similar vein. So I'd say that the floor is significantly higher, mostly because you have a huge different set of investors that are now partaking and that are now supporting Bitcoin. Much more different than obviously the more concentrated, more crypto sort of native type crowd that was present in 17.
If I can move outside of markets, I just want to know what sentiment is like in the crypto space for builders, developers, businesses. We've talked a lot about price itself, but you're also a co-founder in this space. So how are developers and businesses feeling in this current environment?
Yeah, absolutely. Well, one of the things I'd say is very commonly discussed among some of the most tenured founders in the space is how important it is to prepare resourcing and the team for market drawdowns like this, to make sure that the emotions that come with it, all the negative sentiment, doesn't impact the morale of the team, doesn't impact the morale of the founders that are building in the Sei ecosystem, which is the sort of layer one in the project that I work most closely with. So I'd say that's paramount, is just making sure that we don't get impacted by a lot of the negative sentiment. With that being said, a lot of the resources that are built over the course of a great market, you almost think of saving almost like for the hibernation. When a more prolonged winter, when a market continues to draw down over the longer course, let's say a worst case scenario, 6 months, 12 months, 18 months, do you have enough resources to really be aggressive during this time? Now is the time where projects and companies should be the most aggressive, ironically. That's when the competitors are reeling back, when competitors are starting to rethink how they're investing. Now is the time to really capture as much market share as possible, knowing that a lot of the fundamentals are already set in the market, that more and more ETFs are being applied for and coming to market basically every other week. So a lot of the sort of infrastructure and fundamentals are in the right place, and that's where projects should be most aggressive. So the sentiment, I'd say, amongst the best sort of founders that I know is very, very positive. Like, now is finally a moment where we can have the quiet, where we can have a lot more space to think and make the right decisions, versus when things are, high flying. It's there's certainly it's quite difficult to ignore some of the sort of distractions that come with it.
Yeah. Last question for me. One of your areas of focus at Sei are institutions, and I'm wondering what conversations with institutions have looked like in 2025. Are they jumping in more quickly, or are they more eager to get involved with crypto, given the very different environment we have this year?
Yeah, absolutely. I'd say as a precursor, Sei, very simply put, combines the greatest strengths of Ethereum, the greatest strengths of Solana, so that speed, the performance, the updated hardware of Solana with that familiarity, the developer simplicity of Ethereum. So any type of financial transaction really underlying all of the types of interactions that we have online, payments, anything else, really ends up getting settled to a blockchain like Sei. with a lot of the conversations that we're having with institutions, the big difference between this and 2017, which is the last period that we refer to, 2017, we were still in the education period. We're early innings of, hey, here's a bit of what is in store. Here's the simple way to think about how we're building. Now, I'd say a lot more of the conversation has been, okay, we understand what you guys are working on, what you're working towards, what blockchain is all about. How can we work with blockchain in a compliant way? So a lot more of it's focused on, all right, what are the things we can do? How do we align interests? What are the goals of each institution when it comes to their client base, making sure that their client base gets access versus the competing other places that any client, like you or me, can put our money with, whether it's Fidelity, whether it's T. Rowe Price. So much of that comes down to now the intricacies of execution and implementation, which, I mean, that's the part that makes it most exciting for us on a day-to-day basis.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.